Right, I was asked a couple of questions. One of them relating to the lines that I draw. Um, like in this case, you see, I drew this line when price stopped making new highs at this point, and of course this is coming off. This was news. It's the FOMC news last night, which pushed price up, and you can see going into this morning, price was consolidating around this level. So this was what? This was 1:15, 1:15 a.m. my time in the UK. So I wasn't trading around now, but that was the high that was made. And then this morning, when did I get up? I was looking at the charts from about this point, 6:15 a.m. UK time. And I was watching price because price had failed to make a new low out of here, and then went and broke through, just through the high of this candle. It's just a minor break, which it wasn't enough to get me interested in taking any trade. But when I saw this candle pushing up again, bullish, and it broke this level, I did start to get interested in maybe going long. I can show you on the 1 minute chart in a minute why I didn't enter long. But you can see after price went out, I was looking at price to come back and test the level here. But by the time it had come back and tested, see this 15-minute bar had formed, and it formed a 15-minute bearish engulfing bar. So after that, I wasn't really looking to go long, because what I'd like to see is price to come back and test. In an ideal world, I'll see all that push out, price come immediately back. See, price broke through that top of that candle and the top of that candle, and then I want to see price coming immediately back and testing that break and that break in between these two candles, between that blue line and that blue line. I want to see price testing in here pretty quickly within this 15-minute candle, and then going away. And well, we'll drop down to the 15-minute chart, and I can show you why I didn't enter long. See, there was the break of, what time is that? See, that's 5:45 UK time. That was the break of that 15-minute candle. And then you see price started moving out and breaking above this 15-minute candle here, which was the 5:30. When I saw that, I did initially think, well, if price came back and I saw bullish reaction within the top of that candle and between these two lines in here, especially with what I was looking for. That's not good, is it? You see, what there is the start of that bullish reaction, that bullish push originated with that candle. And there we can see that there is a minor bearish push down in there. So I was at this point, if price had come back down and I'd seen a bullish reaction within here, within this triangle, instead of having this underneath it, this was happening here, and this candle was bullish coming out of here, I would have been very tempted to go long. But you can see price came down and there was no bullish reaction within that triangle. I mean, there's a bigger bearish move there, but the origins of this bullish push is here. So I was more interested in that level than this one. So I was more interested in seeing a bullish reaction out of here. And if we go back to the 15-minute chart, see now price is breaking lower. Price is failing to make new highs, and it's making new lows. See, we've broken through the bottom of this candle and the bottom of these two candles and come falling down through and here. The unfortunate thing was I was prepared to take a trade in here, and this is 7:45, and this is when I'm leaving for work, and I was almost tempted, because what I wanted to see was price. See, when price came down through here, I was looking for price to pull back, which it did here. If we go to the 1-minute chart again, that candle there is 8 AM UK time. That's London open, and we can see price. See, the ideal thing, and it's not often we see the absolute ideal thing. See, there's the bullish push up, and there's price breaking through this level and dropping through it. You see, in an ideal world, you see price coming back and testing within that red triangle, rectangle. But you can see it came back and tested that high. Because I said I'd be doing a video on my entries, and we can see we like I said, we don't get back into this point here, but we get a rejection coming off of here. And because with me, I'm always looking, when I see a candle doing that bearish candle, I'm always looking for it to give me something to come back, let's say, to this level to get the entry, which it didn't do. So there is a possibility, and entries are it's a very personal thing. Like I say, I always like to see a bearish push like that and then see the next candle just come back and close the gap to the bottom of that candle, because you know, price is fractal. What we see on the 15-minute chart we'll see on the 1-minute chart. as we look here, you see, you get it here. You see, price pushes through, comes back, and closes the gap. Whenever price pushes through, starts making new lows, it will always bleed back, draw back to close any gaps created in here. It's like I said, I learned a lot of this stuff from Chris Laurie. That if you're interested in learning more about this, you want to look Chris Laurie up on YouTube, because I mean his skill level is a lot higher than what mine is, and like I said, that's where I've learnt a lot of this. But what we see on the 15-minute chart, we'll see on a 1-minute chart. What we see on a 4-hour chart, we'll see on a 15-minute chart. You know, it's price is fractal. It's just the scale changes with time frames. The higher the time frames, the bigger the scale involved. I mean, I'm looking at the 15-minute and the 1-minute chart, so I'm on a fairly small fractal scale. But anyway, would I have entered there? See, if I didn't enter here and I saw this candle pushing down and then getting that rejection, that would worry me about going short here now. If I didn't get in immediately, because that is a very good entry. You see, you get the rejection off of this high, and then we get this bearish engulfing. If we don't enter on that one, we've got this one. You see, these three candles engulf all of this. I mean, that is a very good entry. But if I didn't enter on either of these two candles and I was still waiting for his price to pull back and give me something, after seeing this candle and the rejection off of the 76 level here, I'd be reluctant now to go in short. Because I'm thinking, well, you know, what's happening here that's doing that with price, creating that bullish wick. I mean, it's easy in hindsight, you know, you just enter there and there's my 22 and a half pips. Easy. But in the reality of it, in real time, when you see something like that, you're going to think twice about going short. But if we go back to the 15-minute chart, you see at this point we get price failing to make new lows, and we get a break above this level, and then even a break above this level. The only issue here is, see, this is 9:30 AM UK time, and that was red news coming out of the UK. So I wouldn't be trading anywhere around red news. So I wouldn't be trading in here anyway. And then look, you see what price does? Price is broken out of here, look, come back, drawn back. Then these two candles form, look, relative equal lows. Price breaks out, bearish momentum. Look what price does, comes straight back to the bottom of these two candles. And then we start rejecting off of here, look. Price fails to make a new high. And then we get price, this bearish engulfing candle, comes down, breaks the low of this candle and the lows of these three candles. So now, I'm looking at going, I'd be looking at going short after that, definitely. Because we've broken that candle and those three. And so what am I doing now? I'm looking for price to pull back within that red line and that red line. And you know, if necessary, I'd even be looking, if price carried on bullish, going up and up and up and coming up into here, and I see a bearish reaction here on the 1 minute, I'd even be looking to go short within this candle as well. But if we go down to the 1 minute, let's see what sort of entry there was. Yeah, because there's the 9:30 candle, and that's a 1 minute chart again. You can see we've got the opposite of what was happening here. There we had a bullish wick, here we've got a bearish wick. So there's obviously selling happening here, just as I would have thought. Well, there's, you know, there's buying going on here. But then price, see, at this point price could have come back here and just kept going and going and going. Then it would be a different story. But it didn't. Price stopped there and stopped making new highs, and then came back, fell through this level with momentum, fell through this level. So let's see what we've got here. You see, what you'll quite often find is when price, you know, here, you know, you could be getting people being drawn into long trades coming off of here when you see, you know, prices failed to make a new low here and it started going up. There could be people, I'm sure there were people that are entering into long trades around here, and then price goes up and then starts winding down. People feel, oh, you know, price is just pulling back here, but then we get this bearish momentum. See, and price never comes back and fills this gap, and then price comes down, breaks through here and comes back to the bottom of these candles, and then we get this engulfing. And you see, that's what I like to see, that's bearish engulfing there, and then price drawing back into that zone there. I just, you know, after when I see candles like that, I want to see it give me something before I enter. You see, and that's what I wouldn't have got here. You see, there's that bearish momentum again, but price didn't come back and give me anything. Here, you see, you get that price move down, breaking through the lows of these candles and through the low of these candles, look, and then it gives me something. So I would if I didn't enter off of that candle there, and then I get that happening there, and then that happening there, if I've been entered here, I'd be entering here. If I didn't enter here, then I'm definitely entering there. After price then comes back and gives me something else. I mean, that's telling a story right there. It's not, there's no attempt to push higher after seeing that bearish momentum coming out of there, and then that bearish momentum, and then price not being able to get back through the top of that bearish candle. You see, there's 1, 2, 3, there's 4 attempts. 4 attempts for it to push higher, and it fails on every one, and then comes through. I mean, I'd definitely be short there. What would that? Yeah, there's my 22.5 pips there. And what's this? I don't think there was news at 12 o'clock today. But you know, that, I hope, I mean, that gives some idea of what I'm looking for, and I'm looking for entries. But you can see, you know, once you get that rejection, and price from this point is failing to make a new high, push higher than this, you can see we get this run of bullish candles, and then it just suddenly stops and price reverses, and then you get that bearish momentum, and price fails to come back and close it, and then we get it again here. So let's go back to the 15-minute. So that was there, you know, and people will say, well, you know, if you'd entered in here where I was looking to enter, why didn't you hold it all the way down here? How often do you see price you being able to get into a trade and price runs like that? It's not news generated. Like here, it was news generated. Most of these swings are, you know, I'm quite happy to take 22.5 pips with a 10 pip stop loss, because that was another question I was asked. When I enter a trade, do I trail my stop? And I don't, because what day is this? Yeah, this was a trade I took on Tuesday. Let's have a closer look at that. Because this was quite unusual for the pound US dollar, because we had quite a move through the Asia session, because that was midnight UK time on Tuesday, and how many pips was it before I started getting involved? I mean, it was about 18 pips run, which isn't a lot, but it was quite a good run for the Asian session recently. So what was getting me into this trade? I mean, we can see here, look, price stopped making new lows at this candle, and then we get price push up through this candle, but then it failed to get above this one, and then we get this bearish engulfing, and that's what drew me into going short. And I'll show you the entry on the 1 minute chart. Alright, where are we? Yeah, this was my entry here. Because again, we've seen the bullish push up about through this 15-minute candle here, but then it fails to break above the next candle, and then we get price dropping off. And what I was looking at was that bullish push there. I mean, I guess really I did get in a bit early here, but I was pretty confident that price wasn't going to push higher. But here we can see, you get, there's the bullish run in price. Price breaks through it, And you see there's price going back into it. If I didn't go short there, I could have been going short in here. But yeah, I did get in a little bit early, I guess. But see, what drew me in here was the bearish rejection with that candle, and then I got in there. I mean, here we can see again price pushes through, comes back, would have given me a bit here, so I could have got in there, somewhere around there. If I didn't get in there, you see there was another opportunity to get in up here. You see there's the bullish push. Look, there's the triad, the rectangle. Price pushes through it, comes back, tests it, comes through again, goes back in again, and then we get price pushing through it. Look, and as price pushes through it, always, well, majority of the time you'll find price comes back to test the low. Price pushes through again, comes back. But that was a 2-to-1. Well, a 10 pip stop, 22.5 pip take profit. And this I just let run, because when did I? No, did I move this to break even? I might, yeah, I think I moved this to break even plus. I normally give myself, you know, about 1.5 pips. So if I see price doing this in making lower highs, lower lows like this, I will move my stop down. To break even, and just well, just to give me a little bit. But that was, you know, a relatively I mean, this is just a beautiful price action here when you see this stepping down effect. And here you can see price stops making, see price stops stepping down and starts stepping up. So you stop going short because prices stop going down. You can see price stopped making new lows from there, and then broke through a 15-minute candle there, broke through another 15-minute candle here, and then you know, I don't know if this would have allowed me to get in actually. Hang on, let's have a look on a 15-minute. There's the initial break. See, I wouldn't be looking to go long off of just that break of that one candle. Then price comes up and stops just short of this. This is the candle that breaks, that now has got us going through these two candles. But I don't know if I would have gone long there, because I'd want to see price coming back further. Although there you see that candle gets mitigated, that bullish candle there moves out, price comes back and fills any gap there. This candle then moves away, but price at this point doesn't come back and fill in the gap on the break of that bullish candle there. Price doesn't come back quite and mitigate that. So I would probably have been reluctant to enter long there. But here you see that now we've got price moving up. You see now anybody short now, and price is coming up, not mitigating in back into here, and then breaks again and fail and doesn't come back and fill this. Anybody who's short and is continuing thinking, oh, price is just pulling back, it will continue to drop in a minute. After that bullish run up there, anybody still short is now stuffed. So, you know, there's people exiting short trades, or I'm assuming people will be exiting short trades as price is now moving up. But once you see this happening and price moves out again, and especially that is 12:30, that's the New York Open, and look at that, is a brilliant setup. Price, that bullish push out of there, and look how price then bleeds back to fill the gap in back into this candle. Let's have a look at that on a 1 minute. Where am I going? The 19th. I mean, that was classic price action. Where am I? There we go. Yeah, I mean, this was absolutely classic. There, that bullish candle there is the New York Open, and look how price took off after New York Open and pushed out of this bearish push down. Look, price comes back in. I mean, if you're not going short, long off of here, which I might well have been doing, especially as it comes back, fills in there, then we get this going long in here. After this, look, see how that bullish candle goes away and price comes back in to fill that gap to that candle next, that bearish candle there next to it, look, and there, perfect entry, and bang. Mind you, that's only 20 pips. So would I have stayed in it with it drawing back here? I might well have done. Just move my stop to break even plus. You can see if I'd entered off of there, I might well have stayed in that that long trade and not exited here, because price didn't come back and threaten my entry, and there's this zone that's protecting my entry. See that bearish push down there is protecting my entries within it. So what does that look like on a 15 minute? Where are we? So you could say well, why not go short from here? Well, the answer to that is see, by the time price got back up to test this level, it's failed to make new lows and is breaking through structure here. It's only gone through one candle, but look how bullish we are. This is just a pullback to test these levels here. This is just a pullback in a bullish run. So I definitely would not be looking to go short in here, because price is broken through minor structure with that candle to reach that red line there and that red line there, which is the break of that candle, the break of that candle. When the price gets back to it, it's had to break the high of these candles to get there. So that's definitely not a short trade in there. If anything, you see price pushes out, comes back, doesn't quite get to the top of these candles. So I didn't go long there, and this was interesting as well. Once price got up here, and I saw price failing to make a new high here, and then was breaking through these structure points, minor structure points, all the way down to here. I wanted to see price come back. If price had come immediately back to that level, the 27.28 level, right where that dot is, I'd have been going short. But it didn't do it. It did it here, look. That was 7 AM the next day on news. And quite often during news events, orders will get pulled, and it doesn't take a lot of orders to push price to where there's liquidity. And that's exactly what happened there. That push up. But of course, you can't rely on that happening every time, because there, look, price dropped down, and there's an unmitigated candle right there. See, this level never got filled in. It got filled in there. But, you know, you just can't rely on that happening. That's why I'm just looking at short-term events, like when price pushed out of here. If I wanted to see price come immediately back up to this, to test this breakout zone right there, and it didn't do it straight away. By the time it's getting here, it's too late for me. I'm not looking to enter trades here, especially on red news. But you'll quite often see this kind of thing. Price comes down. There's obviously buy orders been left here. There's something happening here that draws price. Orders get filled, pushes price up. There's obviously orders here that haven't been filled. And it's obvious in hindsight, but trying to do that, you know, by predicting that price is going to go there and then go there, is next to impossible. So I don't even bother with it. I'm just looking at short-term events. I see price break out. I want to see price come immediately back to take a trade. Because here on Wednesday, this was a difficult area in here. Because we can see after the news, you see price came up into that level and then price dropped off. And then we see price stops making new lows. Here. That bullish candle in goes, it breaks the high of that candle and the high of that candle. So in theory, I'll be looking to go long in here. So let's just have a look at that a minute. What time is that? That's 10:15 yesterday. So 10:15. See, there is the bullish push out. Bullish momentum takes us out. Price comes back in. We get this bullish candle, and then price even gives me some back to get in. So I could have entered, I might well have entered long off of that. But we can see here, look, see, enter, say I entered in that bullish candle, engulfs, then price gives me some, pulls back into the range of this candle. So I might well have gone, after seeing that bullish pin bar, 1 minute pin bar, I might well have gone long right there. You see, that pushed up, gave me 5.8 pips, let's say. And at this point I'm thinking, oh, brilliant, you know, that bullish engulfing, making a new high, all's good. But then look, price, there's my entry, say my entry's on that blue line. Price then comes back, all's good still. You see, all's good still on this point, but now look, you see that bearish candle there. So you've drawn a level from that point. I mean, doing all this stuff, it all comes down to experience. I mean, I've been doing this 10 plus years, so when you see live, when I watch live price action, price moving, you just get a feel for what it's doing, what its intentions are. But you can see at this point, you see price is coming back into this level and it's pushing up, but it's failing to make new highs. It's not making new highs over here, and it's starting to make new lows, look. So if I'm long on this blue line and price keeps bouncing around here, I've got lots of opportunities to get out at break even plus. And now it's too late. Price has dropped through. Now I'm stuffed, because where's my 10 pip? Mind you, it wouldn't have actually have hit my 10 pip stop loss. But in the usual terms, once price is broken through this level and come back up in here, you're stuffed. As we look at that on a 15-minute chart, see now price is is failing to make new highs off of this candle, and now look, price is breaking down through. So now I'm thinking, now I'm looking at going short, and that candle comes back up, look, and tests this area. But you see how this candle now is a bullish engulfing. So let's check out the price action around 12:45. Because remember, the New York opens at 12:30, which is there, that candle. So now price has failed to make new highs. It's making new lows, though. It's breaking through various candles' lows, breaking down. And now this candle, so you know, if I'm going short, I've got to be looking to go short in here somewhere. I might have even gone short off of this candle at 12:15. Let's have a look. Where am Yeah, see, I could have been drawn into see, there's price breaking through this level, coming back and testing it. I could have been drawn, I probably would have been drawn into a short trade in here. And here, look, everything's looking hunky-dory. There's 12, see that bullish candle there? Well, if I've gone short here and I'm now seeing this price action, and price is failing to make new lows, I've got to be looking to get out at break even again off of this. And now look, we're into the realms of going long because price has stopped making new lows and is breaking through various structure levels, minor structure levels on the 15-minute chart to start looking to go long. And look at that, that's absolutely perfect for going long. There's the bullish momentum out, there's the bearish push down, look. And then we get bearish, bullish momentum out of this level, and then price comes back into it. We get that bullish candle coming out, coming back in, and off it goes. I mean, I can't guarantee I'd be going long off of here, but that is absolute classic price action. You see it now off of this, because I'm going to stop the video now, because otherwise it's going to go on too long. But there you get breaks of these highs, look, price comes back, tests it, off it goes. Price breaks these highs, comes back, there's the news event, and off it goes. And look, even during news, price breaks through it. That's the 6 o'clock, the FOMC. Price goes, look, breaks through these candles here, off it goes. And then this is 6:30, there was more red news coming back. Look, it comes straight back to these highs, straight off those highs, look, and bang, off it goes. I didn't trade any of this, but it just shows you how price reacts. Look how it's stepping up. See, there is the bullish reaction. Those three candles there, look, bang, it's gone. Anybody who's thinking this is going down and is short in here and isn't looking to get out of their short positions, after these three candles, you're now stuck. Because if you entered short in here, you put your stops up here. Your stops have now been hit. Your bullish stop has been hit. Buy stop. Your buy stops have been hit, and off you go. The price just keeps repeating these patterns. Anyway, I'm going to stop the video now because I've been going on too long again. I'll see you soon. Bye.